Hey traders, hopefully you're having a good day. We're going to be going over four different stocks here. Normally we do like a crypto market, a global macro update, but in this one we'll be looking over Gamestop, AMC, Blackberry, and then we're going to finish off it with SLV, which is iShares Silver Trust, which is basically almost not exactly the same, but very similar to the actual long-term chart of silver, which in my view is still really bullish, even without like the whole short squeeze Wall Street bets frenzy. So let's first start off with GameStop. It has come back down to reality, I guess you could say, from the highs of like 300, 200. I think it hit like 460 or $500, 475, something like that. Pretty unbelievable. Let's check it out. This is the first stock we're going to get into. And what's different with GameStop compared to these other stocks that we're going to be looking at is the fact that every single short who's ever been in GameStop during this parabolic move was under. If you're shorting Blackberry, let's say 10 years ago, or you've been short Blackberry for many, many years, or AMC, you could still have a little bit of wiggle room. But no matter where you shorted, when it started really breaking down below $17, we were in this nice structure here. Once it broke below this major level of support, you see this nice structure right here. Once it broke below this major zone around $17, it absolutely capitulated. We see a big pullback, validating the previous support, and then you see this massive parabolic push to the downside. Pretty unbelievable stuff. And then we saw the consolidation, and from there, the short squeeze initiated. But we do see still, we are probably at a point where there's almost no one who's actually positive who actually shorted, unless they were like getting the absolute top, which probably not the case. But we still do see a lot of room to potentially fall to the downside. The only real potential support that we really have is going to be these previous highs right here, sitting around $58 to $60. Right now we have passed below the zone on the weekly chart. We just see this one massive candle to the downside. No wick, just absolutely pummeled. We'll see if it holds the $58 to $60 range. That's going to be the major zone. If it doesn't, I really don't think we're going to be seeing a whole lot of buy pressure coming in. Not just because of the Robinhood restrictions of only being able to purchase single shares of certain companies, which is absolute BS. But really the fundamentals was the community of Wall Street bets and people who were speculating that hedge funds were heavily shorted this, which obviously they were, but the fact that you can actually corner a market and squeeze up the price to create really rock and a hard place for these funds, so they have to actually exit out. These funds can hold, and if we're going to get these massive moves to the downside, you know, yes, the stock can go up, but the actual fundamental value of GameStop, it's not like it's moving. It's not like it's really shifting from what it was back in September of 2020, you know, to be completely honest. So we're going to be looking at this as a really, really unfortunate situation for retail traders who are or have been entered at like the above 300 or 200. Going to be completely honest, it's basically gambling at that point. You're not really investing anything. It's a speculation. It is a trade fundamentally if you're looking at it from cornering the market, but what's pretty crazy is we made a TikTok about it. When all this was going on, Robinhood was obviously restricting and limiting the ability to trade certain assets or go long certain stocks. When we see Dogecoin absolutely pump, those limitations are not created for Dogecoin. They're actually reducing the friction in order to actually invest in Dogecoin, because funds are not short Dogecoin, so they don't need to worry if it absolutely pumps. So I think people, or Robinhood, the entity, as well as other institutions backing Robinhood, in my opinion, are trying to not entertain, but trying to shift the view of what should be invested in, or shift what investors and retail traders are looking at away from these Wall Street bet short selling strategies, cornering the market, which is a viable strategy if you have a lot of backing of capital, into Dogecoin, because it's an asset that's literally a pump and dump. It has no true, real, like long-term future. It's a meme coin. I personally don't know why it's still around. If you think that it's an investment, I would very much disagree with you. But hey, that is the world we live in, and that's why things like Uniswap and decentralized exchanges, I think will be a lot more prevalent in our near future. So now we're going to be looking at AMC. We can see, like, if we, let's say a fund started shorting AMC after this breakdown right here, we see this major level of support get cracked. Oops, let's go Alt H. And then we see a nice pullback. We see a nice, very, very well-structured zone, a nice contraction, and then the first impulsive push, pullback to validate the previous support as the new level of resistance, as we can see right here. And that is the confirmation that we're going to continue to move down right here. And then you see another little squeeze coming right here. Lots of impulsive push to the downsides and short little contractions to the upside. Very, very nice to see overall within the price action. But we see this nice trending move to the downside, and then this is that big short squeeze. And then same thing, we are past the major level of support that we're looking at here. We see the push to the correction validating the previous support. Let's just zoom right in. And then we see the support, resistance, resistance, resistance could be a potential new support zone. But like I said, the fundamentals, in my opinion, don't really justify the long-term trend to continue to the upside. This was a short squeeze opportunity that created a huge, huge shift in momentum. But in order for it to continue to trend, you need the fundamentals to back the actual momentum that's occurring. So, in my opinion, not going to be a great opportunity. If it does hold the 750 zone, that would be great to see. And then we see a nice structural breakout right here. And then we were looking into playing this range. So then instead of playing in this range where the $7 is the high and the $2 is the low, you could be playing as the $7 low and the $18 high potentially, because that would be the next major level, and it would be very similar length or size in relation, and we've already tested that as a major level of support. So could be an opportunity. If you're in, that would be my last confidence threshold, would be the $7 range. Once it breaks below there, you have a high probability of trading back within this range. And then you can also see that this was a nice little breakout right here. So really, you are going to be, in my opinion, falling to the downside quite aggressively if you get back into this trading zone. So we'll see where it goes. I'm personally not really going to be looking at entering, just trying to give you my 2 cents. Hopefully everyone is careful. Everyone is understanding risk management, because it is pretty important, especially when stocks go this parabolic and crash this quickly. Next thing we're going to be looking at is Blackberry. So we see a kind of round bottoming formation, and then once it broke below it, I think a lot of people definitely were into a short. And then we see a nice bottoming right here. So let's get our brush. See this nice bottoming, and then this is the breakout, maybe right here, as well as you'd put one kind of right there. And then you got this nice support zone. So overall, you see this nice arcing pattern, expecting that there might be a breakout, but then you actually get a failure, right? And then once this level of support right here holds, I think the confidence for the bears were probably not at an all-time high, but pretty close to it, especially when you get this move and then this dump. I'm sure a lot of people were looking, who were short sellers, to be entering within this zone here. And then once you get that break above the $5, $6 range, you got the massive short squeeze that took a lot of hedge funds out of this trade. So we are trading back. The main level of support, if you are looking for any sort of actual momentum to continue, would probably be around like $12 range. That would be ideal. Previous levels of resistance and resistance, creating this trading range, and then it broke to the next trading range right here. And then once it broke back above it and then retested, you're in this one, and then now it just absolutely spiked up. But in my opinion, we're kind of still in, well, I guess we're holding it as a level of support. So ideally it would be nice to hold, and then you'd see a lot of these Wall Street bet stocks continue if you're going to see them continue. But like I said before, I don't really see it, just because fundamentally there's a lot of better options in my opinion. And the massive aggression of the appreciation does not necessarily correlate with the fundamentals. That doesn't mean it has to. It doesn't have to be correlated at all, really. But over time, you're not going to have a price of a stock keep on moving forward for a long duration of time, and the fundamentals go the opposite way. Usually, price action and fundamentals are pretty well, when you're looking at long time frame, correlated, pretty highly correlated. Not like absolutely, but Obviously, things are never 100% in the markets. So now we're going to look at silver, which in my opinion is actually the most bullish. Fundamentally, I feel like I understand it the most just because I'm in the global macro sense. We do know that silver is a sound money asset, and we are in a time when in the future we're going to have significant inflation because right now we have very low interest rates, not just in the US, globally. Central banks have had really no other time where interest rates have been this low. Many countries have negative interest rates. A lot of Europe, Japan have negative interest rates. That's unbelievable. That's unfathomable. Along with that, we also have stimulus. So you make it very easy to borrow money, but you're also giving money to people. So there is a surplus of money in circulation. And right now you're seeing the inflation in assets. But I think at a later point, you're going to see the inflation in everyday goods and services. So we're going to be looking at the CPI numbers, which is the Consumer Price Index numbers, which is going to give us a really good understanding of when the everyday Joe on the street is actually feeling the inflation, because that's when it truly matters. When asset prices go up, everyone who has assets are super happy, right? Rich get richer. Fortunate for the poor, but you got to invest in short. But when you're looking at it from your food's getting more expensive, everyday services are getting more expensive, that's when things start to get more difficult for people, and people speak up. Not saying there's going to be revolts, but at a certain point, if this continues on, like the unbelievable amount of money printing that is currently being presented in the world, the modern monetary theory is true, and I don't think that we can just do this forever. So there will be a time later on when there's huge shifts, when there's massive inflation because of the currency proliferation that we're currently seeing right now by central banks. And at that point, just like we saw in the late 70s, silver absolutely mooned, and gold did as well. Gold and silver were really the main assets that people looked at for sound money investments during inflationary periods when their native currency was depreciating at a very quick rate. And I think we're getting to that phase right now. We already are seeing the US dollar, which is right here. Let's move that. This is going to be the ticker for the US dollar, DXY, right here. And then we do see an actual, I thought it was going to be an ascending wedge breakdown. We actually see it break to the upside. A little bit surprising. I think what we could see is a little bit deeper of a pullback. So this major level at 88 was a very significant zone. We see our first impulsive push to the upside. We could see, let's get our snip, because the bias for the US dollar is to the downside. It's dropped over 10% from the March, kind of when COVID started, right around here. From kind of around here, it's dropped over 10%. So we know that fundamentally it's to the downside. Lots of stimulus, low interest rates, making the dollar weaker, as well as technicals, continuation to the downside, consolidation, contraction before the impulsive phases. And now I think we're going to see our next contraction phase. Now, initially, I did think that it was going to be this one right here. We see, actually, it's right here. Give me one moment. Let's just erase that. That support turns into a resistance, slightly series of higher highs. And then we saw our low, our higher low, and then we saw an ascending wedge. And I think it was going to be contracting and then pushing to the downside, but we did not get a confirmation. So we are going to be continuing to be looking for continuational patterns. But that unfortunately did not create a nice ascending wedge squeeze to the downside. And that was going to be our first option. So what we're going to be looking for is potentially this to break. We might have to readjust the ascending zone, might be a channel. But at the end of the day, if we're looking at it from a market structure standpoint, we see our trend. We see lots of hesitation before this major zone right here. We see a break, our first impulsive push to the downside. What comes after a strong impulsive push, breaking a major level, which is this guy right here? You get a contraction phase, you get a pullback to validate the previous level of support as a new level of resistance, and I think that's what we're seeing right now. So that's the overall structure that we're seeing, is a test, break, test, and then a continuation. So this is going to be what we're going to be looking for, is a series of higher highs and higher lows that is going to be opposing the longer term trend, which is down. So that's what we're seeing right now. We're going to be looking for something, a contraction before the next impulsive phase to the downside, when we're going to be testing this as a potential double bottom. But our ideal situation, if it does, is if it fails, we're going to see that nice opportunity to get in these risk on assets. And I think BTC, Ethereum will be absolutely pumping when that occurs. But right now, we don't see that yet. So we're just going to let the price kind of trend. Hopefully it stops right here. If that is the case, that would be ideal. And if it doesn't, we'll have to look at the price action and make sure that BTC is not getting weaker because the US dollar is getting stronger. So that's going to be the potential outcome right now. And then we might see a little slight pop from there, and then you start to see the trade actually come through. So that's going to be the speculation. We're just forecasting what we could potentially see, but as of right now, we're going to take out that ascending zone, which was right here. So we're just going to be looking at this area to see if we're able to get this 91 level as a resistance, and then we're going to get that move to the downside. So that's going to be US dollar on kind of a semi, not long-term chart, but like some actionable things that we could discuss about. And then this is going to be SLV, which is very similar to the chart of silver. And then we see that we were in a consolidation for like 6 years from 2013, so let's say 8 years almost, really depending on how you want to view it. We saw the massive impulsive push after that huge liquidity event that occurred, breaking the major zone of around $18 to $20, and then we see our first consolidation zone. We saw a contraction with a series of lower highs, like so. Let's take a picture right here. So we know that we saw an impulsive push breaking this major zone of $20. This is going to be the new level of support that we're currently seeing. We saw a series of lower highs, contract the price, like so. And then we saw an impulsive push, and now we're seeing the previous major level of resistance turning into a new level of support. We're getting tons of volatility right now. Very high RVol, although the volume is not showing right now, but we do have very high RVol. Since the last video we made, we had an impulsive push from like around this zone, and then it opened up here, pushed higher to like $28, and then came right back basically just above the entry. So not a whole lot has happened after the impulsive push. We're basically at the same place we started, but it still does look pretty solid. We see a nice breakout zone, consolidation. This is the series of the higher lows, and then hopefully this higher high formation holds. This is the current higher low, so we might consolidate a little bit more. This is going to be that higher low, and then once that higher high comes in, and then we've completed the bottoming pattern to complete this nice little shape, we're going to get that next impulsive push to move to the upside. So that is, in my opinion, the current outlook for silver. I do still think it looks bullish, even though there's that strong push to the downside on the daily chart. We can see there's that big open that was way higher than a lot of the trading that's been going on recently. Very, very significant. Let's just see, from the close to the open is 10%. So pretty big move on an asset this large, or a stock, or the I guess trust this large, an ETF this large. But we're going to be looking at this mainly from a larger standpoint, from a longer time frame, because at the end of the day, in my opinion, I think that's where really the money is going to be at, is waiting, being patient, looking at the longer time frames, collecting those big paychecks on the big moves, being able to not use 100x leverage, but 2-3 leverage, and really being able to capitalize on these strong pushes to the upside, and then allocating that into whatever you're looking to store as a longer term asset. Definitely not fiat currency, I'll tell you that much. So that's going to be the end of the video. Hopefully you found it enjoyable. We didn't really go over too many fundamentals, but I do want to kind of display these charts, because I think there's a lot of people who talk about, GME longs, diamond hands, all this talk about how it's going to be continuing to move to the upside. But looking at the technicals gives a tremendous amount of perspective, in my opinion. Understanding certain levels, if they break them, the bearers have significant control. Trying to have some level of risk management when you're playing these highly speculative instruments, like, buying call options that are way out of the money on GameStop, expecting it to continue mooning. That's not gambling, but very highly speculative. So at the end of the day, I do want everyone to make money, but be safe. So I hope everyone is being able to manage risk. Hopefully you guys are making, and girls are making money. There's a lot of opportunities out there. I'm mainly sticking to what I know. I'm not playing these Wall Street bet kind of hype opportunities. I'm looking at crypto, I'm looking at sound money, gold and silver. Those are the assets I'm sticking to because I know in the end they are investments as well as me making leveraged trades, because I'm not going to be long in GameStop for the fundamentals. I'll tell you that much. It'd be for technicals. I see a great opportunity and boom, it has a massive move to the upside, but it's a trade. In terms of investments, would not touch it with a 10-foot pole. So hopefully that gives you a little bit of perspective as to how we view the markets. If you thought this was educational, entertaining, if you thought you learned at least one thing, drop a like. It does help us out. We really appreciate over the 1,000 followers that we do have. Every single one of you is truly appreciated, and we try to make these videos so you are able to learn something. They're value packed, and if you are in the world of trading and TA, hopefully they've been able to help you out. So until next time, have a good one, traders.